we're going to be concentrating or focusing on dividend growth stocks. Well, why get dividend growth stocks? Very simple. Dividend growth stocks will help us build a profitable stock portfolio because dividends that our companies will give their shareholders, these are the companies that will increase their dividends annually. In other words, instead of having a company that just gives dividends, we want to see companies that are continuing to increase or to continually grow their dividends so that they can pay us our dividends. In fact, there are some companies that have consistently increased their dividends for over 50 years. So that's quite a feat. Some of these companies include Coca-Cola. You have Lowe's, the home improvement store. They've increased their dividends over 50 years. Every year they're increasing their dividends. You have companies, Procter & Gamble is another company. And let's see, Colgate-Palmolive. That is another company that has actually increased their dividends every year for the past 50 years. So let's talk about why that's important and why adding these companies to our portfolio is important. First off, when you let's look at the return. Let's look at the return of the S&P 500, because that's something that we like to use as a benchmark to see, okay, what do we anticipate the return on our portfolios to be? So let's look at 2019. In 2019, it was a really nice year. It was a very good year for anyone who was invested in the stock market. In fact, the return of the S&P 500 in 2019 was 31%. 31. Typically, you see an annual return on the S&P 500 anywhere between 7 and 10%. So of that 31%, 3% came from dividends. Now you may say, well, Marcia, that's not a lot. It is. It is a lot because it's contributing to the profitability of your portfolio. And so if we know that we can get a certain amount of return on our portfolios from a dividend growth companies, that's a reason to invest in them. So that's reason number one.